Hey guys, welcome to Money Mindset and More. And today's quick discussion point is what financial preparation somebody should consider when they are trying to start a new business or any new venture like investing or diversifying their income, etc. In my experience, you can do this in several ways, but around 7 to 8 points which you should definitely consider whatever your scenario will be. And if you think through all these points carefully, then you will find out what is the best strategy for you. And I will cover all those points quickly today in this video. The first and foremost is you have to assess your current financial situation, whether you are budgeting every month or year for all the expenses, and what kind of savings you have in case of emergency funding. Normally I recommend to divide the budgetary part into two kinds of expenses. One is cash cash expenses where an absolute cash is required, and another one is a credit expense which can be run for a credit card for some time, or you can pay every month on your credit card. So examples will be your mortgage and car payment will be always a cash payment. Whether you are paying from your bank or not doesn't matter, but they are cash payments. But your utilities, your phone bill, etc. are credit, can be credit expense as well. So you have to make a comprehensive list of your budgeting, what how much cash you need and how much credit you can use. Ideally you should do cash, but how much credit you can use in case you want to. And then you have to have saving for almost, I would say, 12 months, but worst case scenario 6 months for sure. So whether you have those savings or not, those two things come from your personal assessment. Then you need to estimate all the costs involved with your startups. What kind of, let's say you want to start a e-commerce company, then product, technology, subscriptions, inventory, your registration cost, or any regulatory cost, all those costs you have to make a comprehensive list for that, and then probably add a buffer of around 20% on top of that. So let's say your cost is coming around $100, take a buffer of $20 as well. So total estimate should be $120 expense on your estimated cost. Now you have to, as a third step, you can develop a very detailed plan, a business plan. And I would say start from product, services, and things like that, and then go for financial projections, how your income statement might look like, how your cash flow might look like, so that you can cover all those ongoing expenses as well as your startup expenses. So that way you can estimate how much revenue do you need to break even, and then ultimately make some real profit out of business or an investment. Either way, it works in both scenarios. Then comes your securing the funding for your business. It can be done in many ways, but all can be classified in three simple ways. One is your personal funding. You might use your savings and things like that, which you might have 401k or something like that. If you are very interested in withdrawing that, then you can use external sources like venture capitalists, PE firms, other investors, angel investors, and all those people. And then you should definitely have a line of credit for your business, a separate business credit card or something like that, so that you can have all the flexibilities in securing funding for the venture which you want to run. The next one is you have to understand the tax implications. Most people avoid that and they don't understand. So definitely work with a tax consultant share your current scenarios, and then plan how you are going to do tax planning along with your startup. Major expenses comes from sales tax, and then employment tax and employer tax. All those things has to be considered. They are a very huge amount of expense in any startup or any company. If you avoid those, you might eat up all your margin in just paying the taxes. Next major expense which you have to consider is health insurance and your retirement cost. If you're going to offer health insurance to yourself and to your employees, then it's a huge cost. Also, if you want to do retirement planning for your employee yourself, it's again a huge cost. Every payroll providers charge monthly fee on running retirement programs, and in case of startup that can be very high as compared to the earnings ratio and other things. And some of the tips I will give, like you need to put your separate business and personal expenses. Don't mix those. It will be very challenging later on to separate once you have a lot of transactions. You need to also budget for insurance coverage. It can be two ways I will always recommend. One is your personal liability insurance, and the next one is your general liability for your business. Those two are very, very important for you to cover all the unfortunate situations in business. Then you need to also build a support network, work with different bankers, work with small and local vendors, work with local payment providers, big payment providers. You should have a strong network of people where you can do transactions, you can lend money, borrow money, and things like that. Very important for you to have that flexibility in mind. So these are the points I will always recommend you have to consider in your business. Let's say you are going to start a company or you want to start a new investment, for example in real estate. Still all these points are very valid. Every financial step which you take in United States has a direct impact on all the things which I have mentioned. Hopefully you find this valuable. Let me know if you have any specific questions on any specific points. Now I can cover in detail from my experience. And please like, share, and subscribe. Thank you so much.